Good evening, everybody. This is a typical fall evening for Pittsburgh, a little bit drizzly and gray most of the day. So today we have the great pleasure of having Sarah Porter giving her presentation on some very simple but highly productive option strategies. As you can see in her bio, she is basically a professional trader. So with that, Sarah, we're very anxious to see your techniques. I understand they're very simple and easy to understand. Welcome to the Candlestick Forum.
They are, and thank you, everybody. Thanks for having me here this evening. I'm excited to be speaking with all of you as well. We're going to talk tonight about the two strategies that pretty well I rely on most often for trading. And these strategies, what I have done is really simplify them, and my goal for you today, for all of you that are options traders, is that you can apply these strategies tomorrow. It's all about breaking things down, making them simple, useful, repeatable, and authentic real trades. So we're going to go through some slides to help you with content, and then I'm also going to try to spend a lot of time in the charts as well, talking about examples where I've actually placed trades and where I have trades on right now. Of course, for all of you, if you have questions, I like to make all of my presentations as interactive as possible. So please feel free to type in the chat window. I'm happy to answer questions as we go, as well as I'm going to give you some time at the end so we can actually answer any questions that you might have. All right, so let's dig in. I always start with this slide because it's important to remember that there always is risk in every trade. There's lots of reward, and that's what we're always looking for. But we are trading, and the reality between every trade is there's always a winner and a loser, and our goal is always to be the winner of the trade. Well, if you're hearing that squawking, of course, that's what real-life trading is. I have a three-month-old, and she is just deciding, of course, to talk just right when the presentation begins. Okay, here we go. You know what? It's real life, right? Yeah, I've had her started trading when she was 4 days old. She traded with me. And I guess that's actually a good segue to talk about when you're deciding what to trade and what strategies to use. Remember that you want to be trading strategies that you can still do other things. And so I'm living proof, having had her start at trading. She's my second child at 4 days old, and now being 3 months, is that you can still do all of what I'm talking about and still have a life and do other things, right? As much as I love trading, and I've been doing it for a long time, I need strategies that are going to be very useful for me, whether it is something that I can do because I want to go out and play tennis that day or go for a ski, or I have kids to look after. And so even if you're retired, same thing. You're doing this because you want to be able to do other things and enjoy trading. So if you haven't heard from me about me, I just got back actually from Chicago, the All-Stars of Options there. And I was presenting there, and I do a lot of different presentations all over the place. But essentially, you're seeing this screen, and this is just a little bit about who I am and what I'm most known for. So my approach to the market is simple, straightforward, and really looking for consistency. So for me, if I'm trading, I love to trade weekly options. So a lot of the examples you're going to hear about tonight are weekly options, but this is certainly something that you could be using for monthlies as well. I find over the years that I've been trading is that, I can make more money in the weekly trades than I can in a monthly. I know that's a whole other presentation. We don't have that much time to get into it. But if I look back at all of my trades, most of the time I can get those trades on and off and have cashed out, put some money in my pocket, and then got right back into another trade more often than just holding one monthly option. So I find that weekly options are just a really nice way to kind of manage that risk reward nice and cleanly and be able to place multiple trades. And so yes, for all of you who are typing in the chat window, I am Canadian. I try my best to not sound too Canadian, but I guess it's happening. I'm from Toronto, although I trade all the US stocks. So back to the slides here. I'm all about trading real money with real trades. Very authentic. That's very important to me. Perhaps that's the Canadian in me. When I look at the trades that I'm placing, all of the trades that I look for and the setups we're going to discuss are talking about trades without adjusting. So I believe that if you find the time and you take all that evidence at the beginning before you place a trade, that's where you want to do the work. And you want to set up those trades so that by the end of that, all you're really doing is cashing out. I don't want people to be stressed about feeling like they have to make constant adjustments to the trade. So for me, I do that work up front, and a lot of times whether I'm just letting something expire without having to worry about it at all because I've traded a spread and taken advantage of premium, or I'm cashing out because my profit target has hit quickly. Now, the markets that we're seeing right now, this is a very appropriate strategy for markets like we're seeing. These markets today are range bound. So we're seeing markets that are still moving, but within a range. So if we're aware of that range, we can cash in quite quickly and hit those profit targets. So typically, if I'm buying like a call or a put, I'm a lot of times hitting that profit target within 24, 48 hours. And that's just because we did the right work from the beginning. The trades that we're talking about are often repeatable. So if you've placed a trade in that stock the 1 week, you cash out, and then you look to do it again the following week. And that repeatability is really nice in terms of a strategy. When you look up one setup, you want to be able to do it regardless of what's going on in the market. So let's actually switch over here. I want to show you my charts, and we'll talk a little bit about that. Can you guys see my charts now? Thanks, Jason. Great. And actually, how many of you are options traders right now as your primary trading tool? All right. Yeah, I mean, my story is I've done trades in a lot of different trading instruments, moved around from futures, stocks, and I just settled into options, and it's really, to me, kind of the best of both worlds. The best ability to manage risk really well and to still be able to capitalize on a lot of reward. And this lovely margin that you can use when you're trading options really gives you a lot of advantages. So what you're seeing right now is my charts, and this is how I look at everything. And right now in particular, you have me looking at the ES. So when I'm placing a trade every single day, the first thing I always do is go here to the broad market. And I always pay particular attention to the actual futures contract of the S&P. I do that for several reasons. The biggest one is that this is always trading, so I can always pay attention to what's going on. And that's always nice that I can log in whenever I want to and get a nice little feel for how the market's moving. So when I'm looking for trades, what I'm doing is I'm starting on the daily chart, and I'm looking for something like a trend. And I think after today's move, it is quite evident where we are right now. We've got some good level of support in terms of price in the broad market, but there's definitely a lot of heavy load and pressure that's moving lower. Now, as we move into tomorrow, I think the big expectation is that the market is going to drop out of nowhere. I'm not sure how everyone's placed trades to set up into tomorrow, but certainly if you were watching the options chain today, you could definitely see that there was a lot of people putting on puts. Now, in my opinion, a lot of times when the market is too heavy on one side versus another, it'll actually move in the opposite direction. So I just, being a little careful as we move into tomorrow, it'll be interesting to see where the market opens. So so I start with the daily chart. I determine whether there's a trend, and then I move out to the longer term charts there, the weekly, and I use a 60-minute and a 5-minute chart to help with my entries and my exits. So I really like looking at multiple time frames. I find that I can use this kind of a visual quite nicely to find levels of support and resistance from the charts. And then what I do is combine that with the information from the options chain, and I find areas that are similar. And when I find areas that are similar, that's where I want to be placing my trades. All of my trades are actually swing trade positions, so I am not a day trader. Well, I mean, of course, if the profit hits, then of course I'm going to take that. But I usually set up my trades so that you are holding them at least overnight, and then with options, because of your lower margin requirement, you can do that kind of stuff. So typically in terms of strategies, or my two favorites are buying calls and puts, and then selling credit spreads and doing that where there's premium. And the key to both of those strategies, it's not the textbook, if you read the textbook definition of what those are, it's about understanding how to combine the information from your charts with the information from the options chain. And when you put those things together, that's where you're increasing your probability of success on your trades. So what might seem risky to one is actually increased in probability when you're linking those two things together. This is a just really quick slide, just two pictures. I am from Toronto, Canada, and as I'm sure you all know, our reputation up here is we can get quite the winter, quite cold. So I escaped to California in the wintertime, and again, this is just more proof of a lifestyle that you can enjoy when you do trade and options in particular. So there's always a bit of a kind of push and pull about how long do you hold trades. I think there's always a discussion and a feeling for everybody. What is the optimal amount of time to be holding trades? And I'll let you know about my success. I have had the most success placing trades where I'm basically holding spreads for no more than 3 or 4 days, and actually being able to place credit spreads in weekly options and doing that on Wednesday and only holding them through till Friday has been very, very successful over the last little while. And then when I'm buying calls and puts, holding that out, so using the weekly options, but using kind of a 2 to 3 week time frame for those. I find that that's a nice balance of giving the underlying or the stock enough time to see it move without having too much of a theta decay really kind of influencing those trades. So my goal every week when I'm placing trades is to cash in on them by Friday, and my goal is to have a stress-free Friday. So that's always the joke in the trading room when we do the room in the morning on Fridays, is whether or not we'll all be off at a bar somewhere or whether we're still watching and having to monitor positions. And a lot of the times we're off enjoying ourselves because of the way, again, we've set up the trades. We've already either cashed in or they're expiring for max profit. So let's go. I want to give you some more examples here. So, I mean, because of the market that move we actually saw today, if we look at a lot of the stocks, a lot of them have moved down. So obviously it makes sense for me to talk to you about all of the puts that I've traded. And here's the thing about me. I want to talk to you and show you real examples, as I think that's important. But remember, when you're trading, you are going to have some that aren't going to work. So I look back at all of my trades over the last 2 months, and of all the closed positions, I've had 35 trades and coming up with a profit of $567 only if you are trading one contract. So it is important, just to be authentic and real. In my trading room, actually, I text out all the entries and the exits as well as summaries so people can keep track of everything. So anyways, here's one example. This is Disney. So if we look here at the stocks of Disney, and I start here at the daily chart, we're seeing price move lower, right? All of the candlestick bars there are below. These are exponential moving averages, by the way, on my charts. If you want to write them down, I use the 8, the 13, the 21, the 100, and the 200. So I don't know if you guys can see the colors or not, but the purple is the 8. Your gray is the 13. The gold or yellow color is the 21. I hope that's helpful. Anyway, so you can see that the candlesticks are moving lower, and you have lower lows. There's definitely a steep trend to this one. So obviously then, if you're thinking about what do you want to place a trade in, the simplest answer is, well, I should buy a put, right? This is moving lower, why not buy a put? Makes perfect sense to me. We cashed out on a Disney put there, I think about a week ago, with the same idea. Price was moving lower, so all I did, nice and simple, is buy a put and take advantage of it. Now, the way you make these things actually very helpful, though, is to look at the other time frames to decide whether it's actually worth it to place a trade. So anyone can go to Disney, anyone can see it's moving lower, and they say, I'm going to place a put, right? If it was that easy, then everybody would make millions of dollars in the market. But the reality is that's not. There are actually very few people who do really well in the market, and I'm very proud to be one of them, and even in the trading room, we're very proud of the results that we produce. And again, it's because it's not as easy as just going to the charts and saying, oh yeah, things are moving lower, so I'm going to buy a put. You have to be able to determine what the right price is and what strike is appropriate at the right time. And that's really what we go through in the trading room. We go through examples during the live market, and you see me actually place live trades with my options chain. But one thing in particular here with Disney that we used, if you look on the weekly chart, which is the chart there on the far left above my radar screen, what I like to pay attention to is where are their recent lows. And a lot of times price will actually get attracted back down to those previous lows. So that's where I'm going to start to begin to assess whether it's really worthwhile to buy the put at the price that is up there. So when you move to the options chain and you look at the bid and ask, and then you move back to the charts here, you want to say, okay, for the cost of that put, how probable is it if I apply that cost of the put to what the charts look like? Is it really worth it? So let's say the put's $2. Is it really worth paying $2 for that at that time? And then your answer will be yes or no. And if it is, then that's your trade. But see, this is where people get caught with stuff like this. Sometimes what they're doing is they're chasing a move lower. And that's where I think it's really important to use the shorter term time frames, the 60-minute, the 5-minute. That's where you're actually waiting for price to come back into the moving averages. Use those levels to your advantage and then place your trade, because that's where you're going to see that fluctuation of price between bid and ask to actually get a good price. I always talk about it or joke about it as a deal. So I'm looking for a deal when I'm trading. You know, everyone gets really satisfied when you go shopping and you buy something on sale, right? You buy the product anyways, probably, like, you know, whether if it's your regular brand of bread that you purchase or your regular juice, whatever it is you buy all the time, right? But when you see it on sale, you feel good, right? You feel good about that purchase. You feel like there's more value there, even though it's the same product that's in it. So if you apply that theory to the trades that we're looking at here, it's the same idea. What we're looking for is we want to look at the same product that we go to purchase all the time, but we're looking for products that are on sale at the time so that we can benefit from that savings. And so that's essentially how I'm buying puts and calls, taking advantage of how price is moving, so looking at the direction on the underlying, and then combining that with what we're seeing in the options chain. I hear you, Ram. You know, I've never got into couponing. I knew was it TLC where they have the show on where all these not crazy, but they're very dedicated people that do all the coupons so that they don't have to spend any money at the grocery store. I don't have, I suppose I spend my time in the market instead. So Paul's asking about a favorite level of breaking up or down. So obviously the 21 is my favorite level, and it's not just me. The reason why the 21 EMA is so effective is because it's such a widely used level. And so when we're thinking about trading and on your approach to trading, is it's not about kind of finding a needle in the haystack. Like, the most success in options comes from hitting the ones a lot, right? From doing well with one, keeping in mind what your commissions are, being in it for the long term, and looking for a way to build income. And income generation comes from the ability to place trades often and not just waiting for one trade, one trade every 6 months or one trade every month, and then hoping that that's the winner of all winners. We want to be in the game, collecting nice profits all the time, and then having those big moves, those big trades that really bump up the account. And so that's really my philosophy, I suppose, about trading in a nutshell. Okay, so that's Disney. Let me move to my other strategy that I love. And here is one in particular. So this is, you should be seeing CMG now. So CMG is an interesting stock. CMG is one that we all know that CMG had their E. coli issue this past winter. So in all fairness, I wasn't trading it through that mess in the news. Because anytime you have a stock in the media, a lot of times the price can actually start moving all over the place. And obviously what was happening in CMG was quite negative, so we were seeing some significant moves. And that wasn't the way that stock typically behaves over the years. But when I look back at all the trades over the years, this is a bread and butter trade to me. I am involved in CMG almost every week and have been for a very, very long time. Because when you get to know a stock well, it becomes just automatic. You reach this level of automaticity with your trading where you just find your levels, you pick them, you take the credit, and you move on. So I placed this trade today. So this is one I'm in currently, and this one expires tomorrow. All I did was take premium, so I call this kind of fishing for premium, on Thursdays moving into Fridays, being involved in large stocks like this. So if we look at CMG here on the daily chart, this one doesn't have too much of a trend right now. This one is pretty well moving sideways. So we don't see a distinct direction on the daily chart of CMG. So what I then have to do is go out to a weekly or a 60-minute chart to determine a direction. And when you have a stock that doesn't have a direction, that's when it makes it very, very nice to be trading spreads. And so a lot of times I get asked questions, how do you know what strategy? When do you choose one over the other? What do you actually, how do you know that in CMG you should do a spread today and not a call or put? And the answer usually comes in where is the underlying trend. That's the simplest way to put it. So in CMG, this one's moving sideways. So in my head, I'm thinking, okay, I'm not going to try to look for a directional trade here. It doesn't make sense. What does make sense is to take advantage of premium. This is a very expensive stock, so I can stay involved in this, keeping my margin requirement low by selling a spread. I can manage the risk. Actually, I believe someone a little earlier in the chat window talked about selling puts or selling trades, and that's a very high risk strategy. So the way that you can manage or mitigate some of that risk is to do the spread. So I have traded in here and have done the 417 halves, and that is expiring tomorrow. And I placed the trade in the morning. So I think what time is it? Sorry, not the 417, the 412 halves. I sold the 412 half, bought back the 407 half. And I placed that trade, it was around 12 o'clock. I'm just looking at my entry. So it was around 12 that I got filled. And again, putting the trade out there, assessing the options chain to see where was that nice level. How can I incorporate some of the support and resistance from these charts in with what we're seeing on the options chain that day? Now, I did say at the beginning there that CMG is, sometimes people are afraid to trade this stock. If you look at the bid-ask spread in CMG, you'll notice that it's not very narrow. It's a wide bid-ask spread. So sometimes that can be a little daunting for people. So that is something that I do like to talk through the trading room a lot, is we talk about, when is it that we should actually be executing and getting into that trade with our money. It's one thing to say, yes, I know where the direction is going, but when to actually enter those trades are key. So we talk through that. And so here, this one worked really well. So you shouldn't be afraid of stocks that have a wide bid-ask. You just have to know how to trade them. The spread that I did here was a trade. I sold the 412 halves, and I bought back the 407 half. And I think I took about 32 cents on that one. I started at that price. That is a put credit spread. Remember, the risk is only on for 1 day, so you're really looking for that out of the money, not having to deal with prices. So when you're doing, if you're new to spreads, what you do there is you are placing a trade where you don't think price is going to close tomorrow. Anyhow, so that's pretty well CMG I am in pretty well every week. Okay, so let's talk about one. I'll share with you one that I think looks good and looking for an opportunity that I do think is going to have a nice move, and that's here in Facebook. So Facebook here on a daily chart has a nice direction. It actually has sold off a little bit today, so I mean most things did. It's not surprising that this one did too. But I think actually what it's doing is offering a nice opportunity for an entry. So putting in a couple factors here, let's talk about what's happening in the broad market right now and how do we then layer in what strategy we're going to place. So let's use Facebook as an example, and I want to try to walk one through with you together. Of course, the markets are closed, so analyzing the options chain right now is a little more challenging because obviously that's the piece that's important. But when we're trading and we're talking about trades at night, the best I can do here is talk with you about the chart. So again, this is one that has a nice direction, so I'm looking for a call here. I always want to be on the side of the trade where I think there's going to be the more of a move. So if you think about who you are as a trader, are you a trend trader or a counter trend trader? I mean, you can trade in both directions. There is always a trade to be had in every stock. But for me, I want to set up the risk so that it's more likely there's going to be a larger move. So when I look at Facebook, I think that the potential for a larger move is going to come from the call side. So I think that this one is going to be moving higher. I would rather wait for price to pull back, then look for a larger direction, a larger move, than try to guess and take smaller puts. And so while Facebook will probably come down a little bit, we talked about that today in the trading room, it has, I think, more direction to the upside. And so what I want to then do is first off, wait for the opportunity to buy the call. And I think it's actually, we tried to do this today with a debit spread, and then look at it again tomorrow. So we'll see where things open. By the way, in terms of trading, in the morning, I generally like to just assess where the market is between 9:30 and 10 and won't actually start placing trades until a little bit later. It's often nice just to see things settle down for the morning and then go and enter trades. I don't know, I think that's another good tip too about timing. You don't have to be anxious to jump off the gun from the beginning because you think, oh, I need to be trading. Oftentimes, if you look at what's going on, a lot of times price will have a big move in the morning, but then actually come right back again. And so there's no real need to kind of jump into trades right away. You want to settle down and then look for trades. So in terms of support, I think there's some nice support here around 128. Obviously, we have support at 126 off the weekly chart. So then what I'm going to look then for the strike to actually purchase would be to compare buying probably the 126s or the 127s. So looking for something that's in the money. When we have a market, I'm just going to go back to the broad market here for a second. So I said, when you have a market that is really moving, we're seeing some moves. We definitely saw a move today. I want to be especially careful about waiting for price to come down into support and being aware of the average true range that's going on here, as well as linking that into Facebook. So if Facebook has a huge move already within the same week, it doesn't really make sense for me to chase into buying a call on the Wednesday if on the Monday it had a huge move. Generally, price on every stock will have a big move and then it'll pause for a little bit. So anytime I'm going to go and buy any kind of directional trade, I always want to go back to the broad market first, see how much, look at the average true range, see how much we're actually moving, and then I'm going to take it back and compare it into Facebook. There we go. And then start to relate that to the average true range here. So we know we had a big move, looking at the average true range here, just under 2, and then paying attention to how much of a move it's actually had today, as well as how much it's had this week. So I still think that while Facebook has moving, it still has the potential to keep going. So I didn't need to be feeling like I needed to chase in and use midpoint for my trade today. I felt like I could continue to wait for it, look for bottoms, and then get in. So Mel is asking if I'd buy an in the money really deep. And I do want to make sure I have lots of time to answer questions because I see that there's some that I haven't actually answered yet. So I can't get into this too much. But there is a balance between buying something in the money and then too in the money. And sometimes when you're too far in the money, you might as well just buy the stock because you're not seeing the benefit of options, right? So the benefit of options, again, is that sale and that deal, is looking for deltas that are about to change. So you're picking it up a little bit cheaper, and then it moves even deeper. Rather than having to put up the money, something like $6.85 would be too expensive for me to buy. I wouldn't get involved in that. I would pick a strike that is a little closer to where the money is while still staying in the money. Now that delta is always going to change. I can't say to you, oh yeah, it's always this number. It's always a delta 60 or a delta 70. I just think that once you get beyond a delta 70, you're starting to really get into these levels where you're not gaining the best benefit from the option. And so then maybe it makes more sense for you to actually be trading the stock or going back, and if we layer in what's happening in the charts and the options chain, then we can actually get the best of both worlds. So back to Facebook, looking at something then to purchase probably that 126, 127, because then I have support still from the daily chart, and I have lots of room for this to go. So looking for Facebook to get up through 130. There's really not a lot of resistance there, so I like that idea. Now Dawn's asking about, well, what expiry would you actually purchase? And again, I would make that decision by comparing what's actually happening in the options chain at the time, which is what I do in the live trading room. We spend a lot of time doing that. Of course, because I want to put my money down on the trade too. But typically, because I'm a weekly kind of options trader, I usually like 2, 3, or 4 weeks out at most. Nothing more than taking 4 weeks generally. So as I said, the goal then is to cash out on those trades. I really like to end out my week, cash out on the trades, and then start again the following week if I can. And then I look to repeat the trade. So as I said, something like CMG is I am trying to sell that spread every week and reassessing it and picking the strike, placing the trade, cashing in, doing it again the following week. So really the focus then is on generating that income. So just to summarize, the calls and puts that I like to purchase are in the money. Of course, we still place trades that are at the money and out of the money. But if you're really looking for foundational strategies to really spend some time to focus and learn and use, to me, those are the trades that are your best bang for your buck. Would be buying calls and puts in the money and using them on the weekly option a couple weeks out, and then combining that with some credit spread, so taking advantage of premium. Obviously, we have a market that's really moving right now, so there's lots of opportunities to look to collect premium. And what you're doing is looking for stocks that are moving sideways, and there's lots out there. Now, that sounds pretty simple, but really what you want to do to increase the odds, the probability of success of your trades, is to be looking for charts for your direction, and then you use your options chain for probability. And when you combine those things, that's where you have a really fantastic trade. So it's interesting. I was invited down to, I'm sure you guys, if you're options traders, you've heard of Tom Sosnoff, right, at Tasty Trade. So I was invited down, and I actually saw him last weekend as well, and we chat about trading. And so his philosophy about trading is very much just using the options chain. He trades with probability, doesn't really look at charts at all. And so I enjoy speaking with him about trading because that's how I'm actually increasing my odds of success. So we can actually be in the same stock a lot of times, but the strikes that we've chosen and the way we've set up the trades are different, which is why I have the success rate there, because we're layering in probability with direction. So here's some tips that I wanted to be able to put in here for you. In a market that we're seeing right now, regardless of what you trade, whether you're a futures trader, options trader, any style, having been around for a while, you want to be patient with your entries. Once you're filled in that trade, though, in a market like we're seeing right now, you want to kind of almost be impatient with your exit. So being more careful about when you enter will give you a much higher probability trade than focusing too much on your exit. So really pay attention to those entries. Be very aware of implied volatility, not buying something that's too expensive, or not buying tops. Being careful about how that trade is moving. A lot of times traders get really excited and they enter too soon, and then they start second guessing themselves, and they sometimes feel like, oh, I've missed that entry or I've missed that exit, and that's okay. I mean, I look at my short list this week, and I can look at the trades that I was intending to trade. I was also trying to get into Expedia this week. I didn't get into Expedia. I didn't get filled, right? It happens. Sometimes I'm a real trader, and I put my money there. I thought Expedia was going up. I called that trade on Tuesday and said, yep, I think Expedia is moving up higher. I want to place the call. And in all honesty, I didn't get filled, but look what it did. In 3 days, it went from 110 up to 118.50. So yeah, you know what? Sometimes you miss trades, and it's okay. It's better for you not to give yourself a hard time. If you're in this for the long run, it doesn't matter. It's better that you found the right trade in the first place and you just didn't put your money down than being frustrated and feeling like you've missed this move. Once Expedia started taking off, and I had identified that I thought this one was going to go, and as I said, I didn't put my money down on it. When I looked at this again yesterday, I couldn't trade it anymore. The move that I was looking for had already taken off. So knowing how the broad market is moving these days with those big swings, it didn't make sense for me to then put this trade on. I moved on and placed other trades this week instead because I felt like this was already going and I didn't want to actually chase anything. So the third tip there then is when you're entering trades, use those times that the price is pulling back. So Expedia as an example, it didn't pull back. It did not come back for me for an entry. So all I can say is, sure, I was right, but I didn't make any money off it. I don't want to be entering trades at highs and lows, especially in the markets today. If the market slows down and we start to see things trending a little bit better, then you can give yourself a little more slack on this third tip. But when the market is in the range that we're seeing today, this is going to be very important. Be very aware of when there is a market or a stock moving with a big move. Pay attention to those bars and wait for things to come back. And in particular, use that 5-minute chart to your advantage. Look for those opportunities for entries that come from the 5. So I do have another free event that's coming up, and I wanted to let you guys know about it, and I hope that you will come and join me there, where we're going to talk a little bit more about how to evaluate where the market's moving next. When you kind of have a reputation for consistency, it's important to be able to determine when that market will be shifting and changing, and how do we alter the strategies so that those still work. So on October 11th at 4:30 p.m. Eastern, I will be doing another free webinar and talking a little bit more about how do we actually evaluate the market for its next steps and how to make sure that you can actually be placing trades based on what's actually happening. So thank you, Becky, for putting that link in. I appreciate that. I do want to kind of go back here and look if I've missed any questions and give some opportunity for you also to type in some more. So feel free to type in your questions. I'm going to try to work through some of them and answer them for you. And my email is, you can send out, if I don't get to it, you can always send me an email to info@shecantrade.com. Happy to answer them for you. I always say, the part I hate about trading is that you're by yourself. So that's a big reason why. And you know what? And even in the trading room, all of this stuff, the growth, everything has come organically from the positive reputation that we have. So I love the ability to be able to chat with other people. Okay, so let me scroll up here a little bit and see if I can answer some questions. Okay, so let's talk, quite simply, so TJ Pacman, SET is She Can Trade, which is me. And sometimes actually people are always asking, why is it She Can Trade? Is it only for women? And it's not. That just, I kind of was a nickname or something that long time ago I used to get quite a bit, and people would always be like, wow, that's Sarah Potter, she really can trade. And so that's really where the name from the website came from, just the reputation of people knowing that I could do it, and so hence created the website name. So Paul's asking about whether you think most traders will sell off on Fridays with high volatility and then start over on Mondays or Tuesdays. What I can safely say to you is what's interesting is having just got back from Chicago and speaking with some of the floor traders there and some of the people at CBOE, the way that I trade is very similar to the same ways that they trade themselves, like how they're trading their own money. And that's what I find quite interesting too, is that we are doing very similar things. There are advantages in weekly options. And the biggest one being is you're basically taking your paycheck on Friday and then you're going back to work on Monday. And that kind of philosophy is something that's very nice because you can always stay very accountable to the trade. So there's no losing trades in rolling. There's no losing trades in holding and hoping that this is just going to make a move and taking on that risk. I'm not the only one. It's because it's a strategy that works. So there's definitely people that are cashing in and then entering new trades. How do I determine an exit? So that's obviously going to be very related to what's happening in the broad market. So what I like to do, so I gave you that example in Facebook, is looking at charts for where their previous highs as one example. So because Facebook had a previous high there, that's basically where I'm going to begin to look at my targets. But that's a good question. When you buy options, so if you're looking for a directional kind of trade, you always have to keep in mind how much money you're putting up. And then what is that percentage of profit return that you're looking for? Of course, as a retail trader, you obviously also need to be aware of commissions. So sometimes if you're rolling trades or you're following somebody that has the $1 million accounts, it doesn't make it actually very useful for you to trade yourself because you don't want to get stuck or lost in commissions. You're putting up the risk, you're putting up your own money, you deserve to make the reward. So in terms of creating targets, one is that you need to consider how much money that option actually is, and then think of a percentage of profit that you're quite happy with. Don't go out there and buy a $1 profit and expect it to get to $2 every single time, because you're going to get frustrated, because what you're going to do is give away profit. If you have a $1 profit, you bought an option for $1 and you have made $30 on it and you've done that in 24 hours, that's amazing. You should take that, wait for price to pull back, and then do it again. And that way, over the month, you've made a lot more than holding that one call. So there's a question here about the options chain. The options chain is a story to be told. I would encourage you to come to the next event and we can talk a little bit more about that. Actually, or you can trial the trading room if you want for 14 days for $7, and then you can see me walk through all the trades and where I go through the options chain in a lot of detail. But it's kind of hard to do it during the evening When it's not open, it's not actually moving. So RB is asking about how do you know that most people were on the put side today. If you look at things like the put-call ratio, so your options chain tells a story. There's a lot of information there about where people are trading at the time, where the biases are, and I use all that to be placing trades to pick strikes. Yeah, absolutely. There is always another trade, and that's something that I think takes time to realize when you're trading. Generally, it takes people a couple years of placing trades and then not having winning trades. Is you not all of your trades are going to work out, and sometimes not having a position is a really good position to have. Saul, I sold the 412 half and I bought back the 407 half. So Sean, yeah, a tip for where you are looking to place trades based on where things are going, and I mean that's what we're going to talk about October 11th. We'll have lots of time to do that. Is to be paying attention, I think, to the ES. I think that's a great way to get an undertone of what's going on. Layering that with ticks and then the average true range can be very helpful. So Roger's asking, why didn't you put on the trade when it broke through your favorite 21 EMA? Okay, so that's again the thing. Being a real trader, I'm not going to come out here and say to you guys that and make up some number and be like, look at this, I got it at the exact right move, and look at me, I'm so great. I mean, it's a real trade. So for me, I'm going to tell you when I got in, and that was where I thought things were going to move, and so that's where I placed the trade. Because there's always that balance of not getting filled, right? So if we look and we assess what something, a stock and what's moving, I want to make sure that I'm still going to be able to get in the trade. You can always build the position, start with one contract and build up as price pushes down a little bit lower so there's more credit to be had. That's a great way to add in and make sure that you still get to be involved in the trade. So not coming out with all your contracts just at once, but slowly building your position allows you to get a lot more credit and to continue to be involved in it as it moves lower. I'd love to be able to get every single strike, but that's just not how it just doesn't work that way, and it doesn't need to. I don't need to stress about that. I guess that's the other piece too, right? When you're selling something like credit spreads, there's more wiggle room. So especially if you're a beginner to trading options or new to options trading, that's a fabulous, fabulous strategy because you can still be a little wrong and you're still making max profit on the trade. You don't have to spend as much time being super accurate. You still have money there to make. That's the most fantastic thing about these strategies. It's not about being exactly precise. You can still have some room. Somebody else can still make some too. I mean, I guess, even in the trading room, like when I'm placing that trade and I text it out to everyone else or they're watching me place the trade in the live room, I want them to be able to profit as well. So it's a collective. We are a nice community of trading where we're all enjoying the trades that we're playing. Lynn's asking about how many trades do I trade per week. Generally, I have on about, me personally, probably about 4 to 6 trades per week. And there's me and there's somebody else in the trading room. There's 2 of us. So sometimes you're getting almost double depending on how the markets have changed. But yeah. So as I said, so in the last, so between September and August, I had 35 trades that I closed out. That's helpful. Those are actual trades. Oh, Ray, yeah. Oh, wow, it's nice to have someone else from Toronto. Were you at? I was at the was speaking at the Toronto Money Show 2 weeks ago. Were you there? Yeah. So I use TradeStation. Well, as I said, I'm in California in the winters. So yeah, in TradeStation, I'm using their chart. Okay. Does anyone have any more questions for me? If I haven't answered them again, I mean, you're welcome to send me an email. I hope you found the presentation really helpful. And I look forward to seeing you October 11th, or come and try the room, of course. That would be great to see you there, too, and see it all in action. It's a lot easier to be able to see things when we're actually placing them live in the room, and benefit from the text trade entries and exits. And it's a great group of people, and I know you guys are, too. So. Okay, well, I'm going to hand things back to Stephen, and I wanted to thank him, too, for having me in here. It's really nice to be able to be a part of this group that has been around for a long time, so I'm glad to have been here today, and I look forward to chatting with all of you again soon. So take care in the markets, and happy trading.